Hey guys, welcome back to the Joven Finance YouTube channel. Today we are going to be talking about interest rates and how they can affect you. So if you guys do enjoy this video, make sure you guys hit that like button. So let's get into it. So if you're a credit card company, you love interest rates. But interest rates can be both positive and negative. It depends on how it affects you personally. So interest rates are essentially the set percentage of money you have to either pay or receive on top of a predetermined amount of money. So here's a few examples. So let's say you have this Discover Cashback credit card. So let's say you spend $1,200 in a month, but you only end up paying back $200 of it before the end of the month. So with this certain card, for your first 14 months of owning it, you wouldn't have to worry about paying back any interest. But let's say for our example, it takes place after the 14 months. Well, now we have a big problem because you only paid back $200 of the $1,200, so you still owe $1,000. And with this credit card, it has interest rates ranging from 11.99% to 22.99%. And the number you end up with depends on your credit worthiness, and it will vary with the market prime rate. So if you don't pay back your credit card on time and in full, with our example, you will be paying an extra $100 to $200 for just not paying back all the money on time. And if you continue to not pay back the money, that 11 to 22% will start adding up very quickly. So essentially, you're having compound interest work against you. You're having to pay interest on top of interest that's already been accruing on your money that you didn't pay back. Credit cards have some of the highest interest rates, and that's really how they make all their money. They prey off the financially illiterate, waiting for them to miss a payment and then slap them with these crazy interest rates. So that was an example of bad interest rate. So now let's look at an example of good interest rate. So take this Quantic Bank high yield savings account. It pays you 0.65%. That's not 65%, that is 0.65%. That is less than 1%. And that is an insultingly low, and that's one of the highest APY rates I could find. So let's say you deposit $1,000 into this account. In 5 years, you would have $1,032.92 in 5 years. Now, that bank, depending on what the required reserve ratio at the time is, that bank is taking your money and is getting it to work for that bank. And depending on the type of situation, I would almost guarantee that that bank is making 5 times what they're paying you. But talking about banking, well, we can save that for a different time. But even though the rate is low, it's still positively helping you. It's just very slow. So whenever making a purchase or investing money, make sure to take a look at interest rates. They are a very crucial part of investments and purchases. Interest rates can be on everything from car payments and bank loans to student loans and credit cards. The big companies try to trick you into paying more. But now that you've seen this video, you know what interest rates are and how they can affect you. So now you are prepared for when you see interest rates out in the real world. So if you guys did find any of this information useful and want to see more content like it, make sure you guys subscribe, and I'll see you in the next one.